Hello and a very good day to you. I'm Ranu and welcome to another episode of Market Watch. Today I have with me Mr. Ravi Abesurya, who is the president of the Stockbrokers Association and also counts for many years, over 30 years I would believe, in the capital markets. Mr. Abesurya and I will be discussing today mainly about one of the hot topics that's been going on today, especially about the SOE listings. That is means SOE stands for state-owned enterprises. So Mr. Abesurya, just to get on with things, I think on the topic itself, there's been a lot of talk. The policymakers are talking about SOE listings, etc. And there's been a lot of talk about it, especially in a lot of the forums. So, Mr. Abesurya, in your opinion, how does the SOE listing affect the broader economy, and what are the benefits that we can see, especially looking at the enterprise itself and also the economic implication?
Absolutely. Yeah. I think Sri Lanka is one of those countries where we are still, the thinking process is very much archaic, where when the Soviet Union came up with this idea that every institution should be state-owned, under the principles of Lenin, and the world was talking about socialism, communism, and that's the era where, whether it is UK, China, or practically all the Western world except maybe US was thinking of state ownership is good, because it was thought that labor is going to be being squeezed by the capitalist who owns these institutions, and to give more equal share to the public, those institutions will be state-owned. But over time, what has happened is whole world, maybe except North Korea, has realized that model really didn't work for whatever reason. There are hundreds and thousands of reasons that the model didn't work. Now, coming back to Sri Lanka, we are still hanging on to a arcade model, which basically the politicians are not yet made their decision on what route to take. And there is a very clear and well established, with facts and figures, a route that the world has taken. This includes about 20 countries. A study is there for the last 20 years, how SOE listing has improved the performance of these institutions. Now, number one, from an economic perspective, what we want is more efficient organizations that are not dependent on the taxpayer to continue that organization. So number one is performance. So if they are able to make a lot of profits, that itself will reduce the burden on the people who has to pay from their milk packet to the child's milk packet to in terms of VAT or whatever, or medicine, to sustain this organization. Number two is governance. Now, that is a very big issue in Sri Lanka, because these institutions get boards that are appointed by the politician, and they are not really understanding the business concepts, the organizations, real business they are in, technical aspects. When you talk of a insurance company, you need to have experts who understand about investments, right? So insurance business, not people who have been a lawyer or somebody who happen to be a well-known person. But that's not the way to run organization. You need expertise in these boards. So governance standards matters a lot to make sure these organizations are run transparently and in a way that enhances the utility value of the organization and the product or service they offer to the public.
So I think what you're basically saying, we've been finding difficult to move away from the whole socialistic environment in terms of governance, because I think the mentality of the broader population would be to have that sort of a because we believe in state-run organizations, that idea that that's the most efficiently run, but unfortunately it doesn't seem
it's not happening. It's not happening for so many reasons. It's not happening. So as a result, the economy is suffering. Our growth is much less, and we have unproductive people who are employed but not productive. So we need to give jobs to people on a meritocracy. rather than just to give a job because of how you work with the politician. The politician should not be giving jobs.
Yeah.
His job is to create jobs, encourage more and more job opportunities, rather than look after by taking few of the people who have served him to be working in a organization which is state-owned.
Yeah, I think we'll get to a little bit more details on those structures again, Mr. Abesuri. But in your opinion, I want to know what's the current status of the SOE listing process, and what is the government stance on in your opinion?
Well, the government is saying that they want to list because the model they have been following previously has failed, miserably failed, because the privatization, so-called privatization they did was to give 100% of state-owned enterprises to political henchmen.
Yeah.
So that was a recipe for disaster. Because it was undervalued and given in a way which is not transparent. Nobody knows how the valuation happened.
Yeah.
Sometimes the assets were worth much more than the organization that was given to these henchmen.
Yeah.
Right. So what is important is that we give or make sure these state-owned enterprises are peopleized. In other words, make sure it is listed in a transparent manner where the supply and demand establishes the value. That is called price discovery in a capital market sense. So what make sure is that the value at which 10% of SOE is listed, or a listed company is, further shares are issued to the public, is done at a transparent way where the valuation is established by the market itself. Based on the people who are willing to come in. You won't come in if it is loss making.
Yeah.
At the same time, you don't want to give it out at a song.
Yeah.
So it has to establish its value from the future prospects.
Yeah.
That is how any IPO happens. So that process will ensure there is very clear transparency.
Right.
And the listing itself, subsequent to listing, it will operate in a way where there is very high governance. So because the public will demand, once it is transparent through the annual reporting, quarterly reporting, because of the listing process, there is a transparent act, which will make sure the public demand or public scrutiny itself will demand that high performance. Now this is what is not understood, and as a result there is a lot of political debate, or I would say indecisiveness to go and list, or at least use the listed entities like Colombo Hilton to raise further funding for the government, because there is no need whatsoever for these state-owned enterprises to be remaining with government. Some may be strategic, but others are not. So first start with something that can be easily done, which is already listed. I think no union is going to get talk against Hilton raising additional funding to the government by issuing a further stake.
I think also obviously on those lines of people being very comfortable with the whole socialistic model, but we should understand, I think also with this we would come into a shared capitalism structure also, where the employees could be offered partly of the shares. It's already happening with the employee share option schemes in the private sector anyway. So I think that kind of model also could be included, so that you include the workforce as well in it. I think that will also be a good strategy, where they are not looking at it, because that normal procedure would include, I suppose, Mr. Abesuri.
Yes, absolutely. The share ownership schemes are way forward to incentivize the employees, and also when they retire, hopefully they will have a lump sum to benefit from. So classic examples are there which are successfully done, like Sri Lanka Telecom or People's Leasing, which was done in a way where it was done in a transparent manner in the capital market, and the funds were raised, and the employees also handsomely benefited. Actually they sold out much earlier, but if they hang on to it, they would have benefited much better. So long term shareholders.
Mr. Abesuri, just for the benefit of our viewers, briefly, could you tell me in your opinion, what's the difference between an SOE restructuring and a privatization? I think because there is a huge misconception within the public also about this. So if you could just clarify that for our viewers.
Privatization means, to a large extent, what has happened in Sri Lanka is 100% of a SOE is given out at some value that is established by a third party. There were various audit firms that did valuation. I will take one classic example, Sri Lanka Insurance itself. It was a state-owned entity, which was the largest insurance company, which was privatized and at a value which was established by an audit firm. Now, there was a Supreme Court case, and it was proven that the valuation was not right, and the government took it back. Now, so likewise, there had been several privatizations which really was not done in a transparent manner to ultimate benefit of the public. These are public assets. So you cannot just give it at a song or at a value which is completely undervalued to somebody known to you, or because he's a political henchman. So that's what has happened in privatization. Whereas restructuring means it's an organization which is state-owned, which is requiring radical changes because it's been continuously making losses. So there you need to do some real improvements in the structure, be it additional capital or technology or marketing, to make sure it is converted to a profit-making organization. Profit in the sense not super profits, but not any longer dependent on the treasury to keep on funding. And that's what is restructuring.
So basically, restructuring will take out these entities from the taxpayer without burdening the taxpayer more any longer, wouldn't it? So that the treasury wouldn't have to cough up money just to keep them sustainable. Also, I think with the restructuring, like Mr. Abisuri said, the cogs and wheels will change, and they'll become more efficient going forward. And I think it seems very different to a privatization deal too. So I think that has been one of the major misconceptions in the market. They equate restructuring to privatization.
That's right. And also, not only restructuring, ultimately it needs to be managed in a way. Management is the key. Whether it's public sector, private sector, there's no difference. The key is how it is managed. Unfortunately, when it is public sector, the management or the board makes decisions based on the politicians' interest, right? So as a result, the organization suffers. Be it in the time where elections come to spend money for the politician, or for that matter, for to help the politician to get to the next election.
So I think with being under a single person or that kind of a thing, the efficiency has completely dropped, and there will be funds will be mismanaged.
See, one area you can see classic examples of success stories is the models that I followed in Singapore and Malaysia. The Khazanah model in Malaysia, and there's another one in Singapore, which is, I can't remember the name exactly, which is very, very strong. And if you take Singapore Airlines, it is that structure where the politicians' influence is distant, so that these organizations are run like true private entities. So that will make that difference. So as long as you can keep away the political interest or politicizing all these entities, you will find efficiency and governance and performance improvements and transparency all improving, so that the public will see what's going on.
Definitely. Because obviously, coming to our capital markets again, I would like to know what do you think, listing SOEs, especially for the Colombo Stock Exchange, what will be the implications for the Colombo bars in terms of liquidity? What will we see the changes coming in, the benefits?
The benefits are going to be huge if we go in the right way, because one of the key benefits that study found in 20 odd countries where SOEs were listed is that the market activities increase substantially, because tiny markets like Sri Lanka does not get into the radar screens of most investors. So what we lack is size and liquidity. These are twin problems we are facing. So what we need is more companies getting listed, whether it's private or public. And there's no better way, because government is still in control of lot of sectors in Sri Lanka, which is, you name it, largest state banks, largest insurance companies, even the leisure sectors, so many entities are still in government. So many industry sectors are completely not even reflected in the stock market. So you need to bring those entities and listing like it has happened in even UK, Italy, Belgium, you name it, every country it has been successfully done to increase the market activities. Market performance improves, and then the savers have long-term vehicles to invest for their long-term benefit, like retirement funds, pension funds, mutual funds, unit trusts, all are able to invest this money. Now today EPF, ETF is not in being able to find good investments at a true value. So those are pension funds or provident funds of Sri Lanka which has to invest. We cannot only expect foreign investors whose pension funds, provident funds to be investing in Sri Lanka. We need to, our own people have to have confidence in our capital market. Now today, without enough liquidity and size, foreign interest is very, very limited. It can it's trickling in, but there is tremendous opportunity for our state enterprises also to raise money instead of depending on the government treasury for their future funding, to raise their own money, whether it's equity issues or debt issues, because there is so much opportunities. Take for example, one example, Electrogas. They have tremendous opportunity to increase their production, go into regional markets like even Bangladesh. Now can you do that without funding? No, they need billions of money to put their gas terminals in Hambantota and all that. So you need to raise money. How do you do it? Listing, and then raise additional funding.
So that in that way we see, by listing these entities, especially for the Colombo bowers, the liquidity factor will definitely be a good factor, and also that the broader participation will increase and gives good investment opportunities for individuals as well as our pension funds going forward. So I think even for the investors' point of view, as a individual investor today, they'll have a more of a to build in their portfolios will be a very very successful thing, because they have more industries to focus on as well.
Right,
So, right, Mr. Abhisuri, if we move on to current market situation, how is the political climate currently affecting the market, and what are your thoughts on that? There's quite a big view that there's a uncertainty in terms of what's happening, so there's a restriction from the investors. So what do you feel?
Yeah, actually there were a lot of signals that were given to the market that there is going to be capital gains tax. Now this has been clarified over and over again by various parties. The stock market will not have a capital gains tax imposed, but unfortunately to date the government has not clarified this clearly, whereas SEC has come out and said that, but no clarity from the government. So this is a serious impact on the investor sentiment and confidence, because we don't know what's going to happen. So if you don't know, you don't invest. You will park that money in a fixed deposit, and interest rates are high, so you don't need to take any risk. So capital gains tax is a huge damage to the industry. On top of that, the new Inland Revenue Act is also talking about profit tax, a trading tax. So again, we are not having any clarity on the government policy on whether how these tax will impact. Yes, government should increase revenue, there is no doubt, but that should be by increasing the tax base and the coverage, not really putting additional taxes which are detrimental to the performance of a tiny capital market which is just trying to lift its feet out of the embryonic stage. So we don't want something that is hampering the opportunity for people to invest in the market.
So, Ms. Abhisuri, you're saying is basically with the increasing the tax, the increase the tax base would be a much better idea than further taxing the already paying and performing companies out there and individuals, I would say.
That's right. See, the stock market is very transparent. all the companies that are in the market are listed and are properly audited, and exactly the financial performance is there. Whereas other companies who are not listed can do whatever they want.
Mr. Abhisar, in the long-term view, I'm seeing the policymakers actually, in terms of their stance, would more be, not to do any debt raising overseas, and they want to attract FDIs at the moment. So that has been one of the focuses they've been doing. So in that sense, do you think it's a very short-term in terms of the policymakers? Is they are taking a stance on the interest rate hike to cut down on the local consumption, to more attract, to get the numbers right, and to get the FDIs coming in? Would that be a strategy by the policymakers?
Well, when the stock market is not performing, you can't attract FDIs, because first thing that any investor will look at is the local investor confidence, and that is reflected in the barometer called stock market performance. So you are having a chicken and egg situation. So foreign investors, unless they have ill-gotten money or something, will not come to Sri Lanka when the economy is not giving the right signals. The signals has to be obviously low interest rates, better fiscal management of a low fiscal deficit, and trade deficit is reducing, and the country is able to manage its own macroeconomic affairs. So we don't give any of the proper signals in the macroeconomic management to attract proper foreign investors. There will be a lot of investors who want to park money, which will be not really the good money. So if you want to attract, then we have to have a properly functioning capital market, and no other better base than listing some of the SOEs to show that there is public confidence in the country itself. First of all, people's confidence has to be reflected. So policy consistency is the biggest issue which we have today, impeding corporate investments, because there is so much of potential opportunities to grow, but people are hesitant to invest because of policy inconsistency. So we have to see clarity on exactly how the new tax regime is going to be, and that has to be communicated. There is not even a proper exposure draft on the new Indian Revenue Act.
Okay.
So when you don't know what's on card for you, you can't expect any investor, a sane investor, to invest in a country which is not clear. So those things has to be put out as an exposure draft even, and public consultations are required, because practical situations will be quite different to what the people who are drafting the act thinks. So there is a lot of public discussion is required. So we don't have that, and that's why FDIs are not coming to Sri Lanka.
So that way I think the policymakers will have a big challenge in actually communicating this to the market. So Mr. Abhisar, on that note, thank you so much. Thank you very much for joining us today, and thank you everybody at home. Have a very good day.